Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. Mitsubishi UFJ Financial Group, or MUFG, has trimmed its growth forecast for the Philippines to 4.9% from a previous projection of 5.3%. MUFG cites the recent surge in infections for this downward revision, saying the COVID-19 waves caused disruptions in economic activity. The group noted that the virus remains a major risk to recovery, citing Singapore, where cases surged despite fully vaccinating more than 80% of its population. Analysts at MUFG also said mobility restrictions continue to pose risks to recovery and that the upcoming May 2022 elections could create more uncertainty for Philippine growth in the first half of 2022, as well as the peso. MUFG expects the economy to grow by 6.8% next year, and that is below the government's target of 7 to 9%. MUFG analysts also said the Philippines may only return to pre-pandemic GDP output 2 to 3 years from now. Meanwhile, the Health Department is looking to downgrade Metro Manila under Alert Level 3 by Christmas. To make this possible, the government is planning to ramp up vaccinations to as much as 1.5 million doses administered every day. But that is a far cry from the current daily average of less than 400,000 doses. As of Tuesday, more than 24 million, or 31% of the target population, have been fully vaccinated, and the president is optimistic that this will rise to 50% by Christmas. To encourage more Filipinos to get vaccinated, the IATF is now looking to implement incentives to those fully vaccinated. NTF COVID-19 Chief Carlito Galvez Jr. has presented a list of suggestions from the private sector to boost vaccination. One of the suggestions of the private sector was to allow companies the right not to hire unvaccinated job applicants and to require existing unvaccinated employees to pay for their own RT-PCR tests. The list of suggestions also includes mandatory vaccines for healthcare workers, school employees, public transport workers, civil servants, and the 4Bs. Now, everything seems to be climbing over at Wall Street overnight. The S&P 500 rose towards an all-time peak, and you've also got Treasury yields climbing up. Bitcoin hitting a record before closing at $66,000, and we've got more on that later on today. You can see on my terminal here the surge, at least in the S&P 500, up by 0.4%. Now let's take a quick peek at how Asia is also opening this morning. You can see that on my Bloomberg terminal. The Nikkei 225 down by 0.3%. You've also got Taiwan's TAIEX up, on the other hand, by 0.2%. You've also got the FTSE Straits Times up by 0.07%. So quite a mixed picture. Japan down, other markets in the green. Let's take a look at the index here that we're looking at. Our PComp, that's up by 0.2%, hitting 7,300 already. So will this rally continue on into the trading day? There is, of course, one specific sector that I wanted to watch out for, and that is the miners. You can see that on my terminal here. Mining and oil counter up by 0.2%. Nickel Asia leading that charge, followed by Global Ferronickel and Mark Ventures. This happens even as Dante Bravo, who is the president of the Philippine Nickel Industry Association, but also Global Ferronickel CEO, says that the output will be dropping in 2021 because of the rains as well as some ship delays. He's looking at the volume to be 10% less than the annual average. Of course, he mentioned that most of these mines are in the Caraga region, and recall that Tropical Storm Maring last week brought heavy rains over there. Production will be down because of that, but also just the gridlock in global ports. But despite that, he did mention that the increasing demand in China from the electric vehicle industry in particular will, of course, be cushioning that blow. And one other sector I wanted to watch out for here is the banks, and that is on the back of Citigroup looking to sell their Asia retail assets, and the bidding is due on Friday. Those are assets in Indonesia, Philippines, Taiwan, and Thailand. They are exiting 13 markets across Asia and Europe, the Middle East, and Africa. They're going to be looking to reshape into investment banking, focus on wealth businesses, and around their hubs. So who might be bidding for the Citigroup assets here in the Philippines? that might be BDO, Metro Bank, BPI, and Union Bank. They say that analysts say that that could fetch around $1 billion in a sale. Union Bank's president Edwin Bautista said in a response to a Bloomberg query, the assets will likely go to one of the three biggest banks, but there have been no further comments on that. And finally, still on the banks, we've got our first major third quarter earnings release, and that is from BPI, now trading, however, down to 85 pesos and 95 centavos. This, as they mentioned, that their net income for the first 9 months of the year was up by 1.8% to 17.5 billion pesos. However, the revenues were down by 6% to 71.6 billion pesos, and their net interest income was down by 5.6% to 51.2 billion pesos. They mentioned that that was due to margin contractions due to declines in yields across their loan portfolios as well as their treasury assets. Now, circling back to that record Bitcoin rally amid the ProShares Bitcoin Strategy ETF launch, is crypto here to stay? And if so, how can we Filipinos invest in this asset? Here to chat with us, we have Nichel Gaba. He's PDAX's CEO. Good morning, Michelle, and welcome to the broadcast. Sorry, sir. Can you come off of mute, please?
Sorry about that, Dan. Good morning. Thank you for having me here.
Good morning, sir. $1 billion into this Bitcoin strategy EF
Mhm.
launch in the past 2 days of the fastest growing ETF of all time, and it isn't even tied to the physical Bitcoin. It's not even. It's tied to a derivative. Just give us a feel of why so much excitement about this. Is this something that's a knee jerk reaction, or is this something that signals the start of something very important?
That's a fantastic question, and it's great that you pointed out that the ETF is not actually what you might call a spot ETF or a physical ETF. It's actually a Bitcoin futures ETF. And let me just explain the distinction a little bit. In normal ETFs or physical ETFs, if you break down the fund, you will see underlying securities or underlying assets. But in this case, if you break down this Bitcoin futures ETF, all you will see is cash and contracts. Now, why would the SEC of the US approve something that doesn't seem to be as straightforward? Frankly, it's actually a little bit more straightforward to regulate the futures ETF because it will fall nicely within the existing consumer protections. The SEC in the US is sidestepping one of the key issues in a normal ETF, which is custody. And so with this ETF, they're easily able to avoid those issues. And as we see, or as we can see, the interest in the crypto markets is so high, such that yeah, as you pointed out, in day one of trading, it did at least $1 billion.
Michelle, you mentioned that this is a sort of derivative ETF, right? But analysts are saying this might be a precursor to a spot Bitcoin ETF market. What would be the difference here, and how exciting would that be for the movement of the cryptocurrency?
Sure. You see, the excitement around the Bitcoin futures ETF, it's don't get me wrong, it's warranted, right? Because crypto markets have always been sentiment driven, and anytime that there is greater acceptance of crypto or news about greater acceptance of crypto, the markets inevitably move, right? But it doesn't mean that. As you buy more and more of the shares of this Bitcoin futures ETF, that the underlying fund will have to buy and more Bitcoin. It doesn't work that way. So while the correlation is there, it's not necessarily 1:1. Now, you're also right in pointing out that probably having approved a Bitcoin futures ETF, the US SEC is now more likely to approve a spot ETF at some point. Because over the past couple of years, there have been about 10 applications. And I think right now there's a bit close to that number as well in applications for a Bitcoin spot ETF. More exciting probably than the recent ETF is
Wow.
potentially Grayscale's GBTC being converted into an ETF as opposed to being a traded trust at this point.
How exciting. So even more ETFs to be watching out for there. Some have pointed out that this signals at least the institutional investors really
Right.
getting into Bitcoin and, making it more legitimate, not something that is just, exciting or a fad or a trend that's very volatile. Does this mean that the movement of the cryptocurrency is going to be more predictable moving forward? There's going to be less play for the spikes in the volatility, and really more of a it's going to become a real traded asset that is more conventional.
One of the things that gets lost in all the hype around cryptocurrencies is that the investor base in crypto has actually changed drastically over time, and that is important. In the earlier days, you only saw very speculative traders or even just retail individuals participating in the cryptocurrency market. But now you're seeing institutions. Now, why is that important? Because institutions, they don't typically sell when prices are crashing, right? Institutions have target prices, and so if prices go down, they actually average down, right? They buy more when it's low, they sell more when it's high. So naturally, as the investor base becomes more institutional, you would see the asset slowly become less volatile, or gradually become less volatile. And I also point out that I would also point out that when funds or professional managers buy crypto or any other asset, it's not the same as when you and I do it, right? We can whip up our phones and then just buy it, right? But most of these money managers have mandates that they have to work with. They follow rules around custody, accounting, and valuation, and so it's very difficult for them to access or to buy spot crypto and safe keep them in a
Okay.
wallet.
Okay. All right, let's talk about retail investors then, especially the Filipinos. What should they be looking at? You mentioned that the ETF funds are mainly for institutional investors. Should they be looking at these as well, or should they be sticking to looking at the currency, cryptocurrency still? And also, what's your expectation here in terms of performance? It's been up 130% already year to date. How much farther can this go?
Well, the way that this ETF is designed is that it's supposed to track the performance of Bitcoin. Now, because it's not based on actual underlying BTC, you will see what we might call tracking error, right? So, um, now, with regards to whether retail investors should take part in this ETF, or specifically Filipino investors, at this point, if you want to get exposure to Bitcoin, you still may as well just be better off buying the actual Bitcoin. We have sufficient protections, at least here in the Philippines, that we have uh, regulated marketplaces and exchanges where you can buy and sell and actually hold crypto. So at least if you just want to take part in this ride that Bitcoin is on, you may be better off buying the token.
And what about the strategy here, especially with the performance? Is this in any way, a defensive asset, especially in pandemic, diba? Vis-a-vis the equities? Should you be investing in this when the equity markets are down? How much money should you have before you start thinking of putting your assets in cryptocurrencies? Do you need to be a seasoned trader before dipping your feet into these waters?
Well, what's interesting about investing in general is that it's never been advisable for anyone to hold just one asset, right? So, as we always say, we invest with a portfolio mindset. And at this point, I think it's safe to say that Bitcoin, as volatile as it is, or perhaps because it is volatile, it belongs in a portfolio. Now, with regards to whether or not should this replace equities in my portfolio, that's really a judgment call based on a person or investor's risk appetite. But historically, if you try to analyze Bitcoin's or even the crypto market's performance over time, it tended to not be very well correlated with the equities market, or at least the fundamentals themselves are not correlated. So just based on that alone, it could serve as a good hedge. And in fact,
Okay.
people are arguing that it looks more a lot like gold in that respect.
Okay, so it could be a hedge. As you mentioned, it's still very good to diversify, regardless of your portfolio. It
Mhm.
depends on your risk appetite and marginal risk there in your portfolio. Finally, talk about the PDAX and this recently raised $12 million funding. You have a new investor. What are you going to be using these proceeds for, especially in expanding, the accessibility of these types of assets to the normal retail investor?
All right. Yeah. So we recently brought in new investors. PDAX has been in the market for almost 3 years, right? And so we've seen how the market has grown from something very niche to something now trending towards being a lot more mainstream. Today we have we're seeing a lot more high net worth individuals, families, even financial institutions try and participate in crypto. Here in the Philippines, we also have play to earn use cases for crypto that have been very interesting. So this new funding actually signals not just interest from the outside world in the Philippines crypto market, but also it signals strongly where this could go for Filipinos, right? And that is in mainstream use, and which PDAX will invest in to improve the crypto market infrastructure here and better serve Filipinos.
Okay, exciting times and congratulations on that. Thank you so much. Those were great insights, Nichel Gaba, PDAX CEO. Checking in on other headlines, we're keeping our eyes on the country's outsourcing revenues may grow 8% year on year to almost $29 billion this 2021. That's as global demand and growth continue to pick up. That is according to the country's biggest business process group, or IBPAP. IBPAP Chairman Benedict Hernandez says that they are cautiously optimistic that the industry would achieve high single-digit growth on revenue and employment this year. Hernandez said that by the end of 2021, they also expect that the sector would have about 1.43 million full-time employees. This as they see strong appetite for outsourcing in the banking, financial services, insurance, and communication sectors. Recall that last year, the IT-BPM sector's revenues rose to almost $27 billion last year, accounting for 7.4% of GDP. It also ended 2020 with 1.32 million direct employees, which is almost 2% higher compared to 2019. Now, Smart Communications and Korea's largest telco company, KT Corp, are joining forces to explore and develop consumer 5G use cases for Filipinos. The two telco leaders have signed a memorandum of understanding aimed at pushing 5G innovation in the country. Smart said its 5G users have now reached 800,000, a 200% increase from the number of 5G users in December of 2020. And that's a first look into the business day. Today's Thursday, October 21st, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.